So insurance companies are strict on their underwriting guidelines due to all the, catastrophes nationwide right now, paying out more losses and pretty extreme losses. The Jasper fires earlier this year, along with the water claims in Montreal and Toronto. These events are billion-dollar claims. So insurance companies see what they can do to limit their exposures.
Welcome to the Ottawa Real Estate Podcast. Join your hosts, Paul Stevenson, David Warren, and Greg Campbell, as they explore the world of real estate and mortgages. From the heart of Canada's capital to markets nationwide, and even a little beyond. Get ready for expert insights and hot topics. Let's get started.
Hello, and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I'm joined, as always, by Greg Campbell, David Warren, and special guest today. Not always, but today we got a special guest. We'll bring him in later. Gentlemen, how are we doing? We missed last week, unfortunately, but I'm happy to be back. I'm happy to see your beautiful faces. And,
happy to see that I froze.
Ben, yeah. While Greg figures out what's going on with him, well,
I'm back. I'm back.
I'm
Greg
great.
froze, giving us the thumbs up and the wink and the gun.
How did that happen? Steven, did you do that, or is this like some new tech that I'm using that I don't even know?
The new updated Zoom? Who knows?
I don't know that. Well, yeah, no. I mean the pop-up, there was like a bubble of a thumb after I did my thumbs up. Did anyone see that?
Yeah, I know it does that. It does that on FaceTime now. That's a thing on FaceTime.
So it
but
must
I have
be
not
something
seen it on
with
Zoom.
this. Yeah, that's weird.
Everyone else is going to think that we're crazy. And nobody.
The software app keeps going, keeps turning on when I ask it to quit. That's what I don't know what's going on here. It never works when you want it to work.
All I think about is the scene from Zoolander of like just up on the table, just hitting the top of the computer.
It's just crazy. Yeah, we have a guest today. He's not on yet, but he's coming on soon. Brian Powell from Billyard Insurance Group, right? I think Dave should do the official introduction of Brian, I think, before he comes on, because that's your connect, right?
Yes, sir. Yes, sir.
Yeah.
Well, I know last week we missed because our wires were crossed, and as well, Paul and I were out of the country at a Centum National Mortgage Conference for the week, connected with other brokers from across the country and our lender partners. It was a great week, being able to spend the time in the torrential downpouring rain in Costa Rica. We barely saw any sun whatsoever, but we sure got a bath from Mother Nature.
We were baptized while we were down there. No, shout out to Centum as well. Obviously one of the show's sponsors, but also our national network. And as they've mentioned, really neat to kind of hear from agents from Vancouver, Winnipeg, Calgary, Halifax, like basically all across the country, what they're seeing, tricks of the trade, what their markets are like, average home prices. Very interesting to hear from different people and how they approach their markets, because Ottawa is obviously we know Ottawa, hence the Ottawa Real Estate Podcast, but the market across the country it varies quite a bit. So it was really, really interesting to hear from them and to kind of pick their brains on what they're seeing and how they approach their business. But yeah, really neat. And as Dave said, our lenders were there as well. So it's good to kind of connect with them on a more personal level. Obviously, our business is very much built on, as all businesses, built on relationships. So always really nice to have those human conversations with our lenders, which is, 99% of the time, very professional. So it was a good time. Definitely will be back. I think next year is in Dominican Republic. So we'll definitely be there and we'll bring back all the goods.
That's great that they always do tropical holidays, tropical events, I should say.
Yeah.
Because wasn't that the one? Oh no, that wasn't. Was that the one in Playa del Carmen a couple years ago, Dave?
I was in Cancun last year, and then this year Costa Rica, next year Dominican, and a few years ago I was in Bahamas. Yeah, they switch it up and this is the network we're under. There was the National Mortgage Conference for all mortgage agents across the country in Montreal the weekend prior. So it was a very busy week for me. I was in Montreal for a couple of nights at the National Mortgage Conference, back home for 2 nights, and then gone again for a week. So
tough life.
Lots of info though It really is kind of tiring because it is a lot of information to take in, and you really are on the whole time and kind of trying to soak in as much info as possible. But yeah, it's going to be an interesting year coming up, especially with, what is likely to be a December drop in bank, by the Bank of Canada, and another drop, whether that's a quarter point or a half point is to be seen. And some of the stats coming out are going to change that. I know, Paul, you have an article kind of touching directly on, on that with regards to the Bank of Canada, and again, how it's tied to fixed rates. Maybe you want to touch on that.
I can touch on it. Yeah, let me touch on it.
Touchy.
So Canadian mortgage trends article from Brennan Doherty. It says fixed mortgage rates may not follow Bank of Canada cuts, former TD economist warns. Now, we talk about this all the time. So again, I apologize for anyone who listens week over week, but I'll summarize this article. And I think Stephen has the most recent bond chart there as well. I usually use like a 6-month chart just so you can kind of see how it's rolling. So it says Drummond, a former TD economist, argues that Canada's ultra-low interest rates over the last decade were unsustainable and harmful. He noted that while recent rate hikes shocked many, he had always doubted that low rates would persist. Variable rate mortgages tied to the Bank of Canada's rate have decreased slightly, but fixed rate mortgages linked to bond yields are unlikely to drop further. Drummond anticipates that by next summer, the bank rate may reach 2.75, with bond yields remaining high, potentially keeping 5-year mortgage rates around 4.9 to 5%. Drummond criticized the low rate environment from 2011 to 2019 for fueling housing price surges, making homes less affordable. He also highlighted Canada's stagnating productivity and GDP growth, which he attributes to weak business investment and limited R&D. Canada's productivity now lags behind other developed nations, worsening as population growth outpaces economic growth, leading to a potential recession on a per-person basis. And lastly, regarding immigration, Drummond noted Canada's recent cutback in its target to 395,000 permanent residents by 2025 due to housing concerns. He warned that immigration targets, even at reduced levels, still outpace housing supply, worsening shortages. Drummond believes immigration goals should focus on enhancing well-being rather than simply boosting population, as newcomers face challenges like slower wage growth and higher unemployment, which can impact their stability in Canada. So if we look at the bond yield for the last week, I mean, we've seen lenders actually increase rates over the last week for fixed. So, I've had countless conversations over the last month since the last rate drop of, how does this impact us? How does this change our rate? And it's so important. I know we say this every week, but the Bank of Canada's overnight rate does not directly impact the bonds or the fixed rates. They are typically they're not correlated, but they typically do move historically kind of in the same direction. But there are different factors that impact each one of them. And we're seeing that now. Like, we're seeing the variable rates go down. We're seeing the fixed rates creep up. So very important to understand these things. Talk to your expert, talk to your broker, talk to your bank, whoever it is. Make sure you understand how these changes impact you and what the expectation is moving forward. I would agree with Mr. Drummond. I thought we'd actually see rates dip under 4%. We have very tentatively, but now rates are kind of sitting in that mid-4 range again for fixed. And variable rates on the flip side are as low as 4.95 right now. So, they are getting closer and closer to each other, which historically variable rates are typically lower. It's only been over the last few years we've seen them kind of creep up, but this is kind of getting back in line with where things have been historically. And I think that's really where it should be. Like, if you're taking a variable rate, you should be taking on a bit more risk, and that risk should come with a bit of a reward in the sense of a lower rate. But I think we'll see that kind of balance out over the next 12 months or so.
One thing I have seen in the last week as well, with the fixed rate, with the bonds kind of coming back up a bit, and then fixed rates coming up a couple of days ago, but pretty well all banks increasing them, is they've started to shrink that. We talked about it a few weeks ago, but they started to shrink that discount to prime on the variable rate mortgages as well. So again, I think I talked about it a few weeks ago. If you have a renewal or a purchase coming up in the next 120 days, lock in the variable rate discount right now, set it out that 120 days. You can always pivot to a fixed before your closing date or your maturity date. But what they're going to do is, as prime keeps coming down, they're going to shrink that discount to increase the bank's profit margin. And so you're going to see that. So I looked back, as an example, I looked back to 2020 and 2019 of March 2020. So right before the pandemic, I was speaking to a client, what they got offered. Actually, he was in May 2020, actually. So he's up in May 2025. He was offered from his bank prime minus 0.2. So right now we're in the prime minus 0.8 to prime minus 1% range. 4 years ago, it was as small as prime minus 0.2. So it's something to keep in mind that they do shrink them as prime comes down. Then they do shrink that discount so that they increase their profit margins. And so if you have something coming up in 120 days, lock it in now so you protect yourself on that and get in that best discount to prime. Even if you are thinking about fixed, you can watch fixed, see where it goes over that 120 days and always pivot to that. But it's good to lock that in.
So it comes down to what we say all the time, guys, buy when you're ready. Because we don't know what's going to happen with the rates. They go up, they go down, they move around. You're ready to buy, look at your scenario, make a decision. Or don't.
Now, speaking of that, I know, Greg, you've got some, I know you only have a short period of time with us this morning.
Was that a segue?
Maybe we'll segue Greg into October stats.
I got some stuff here from October, from the board. We got a couple charts here that they're so kindly sharing with us now.
Let's get into the numbers.
Go out and do my own. So,
do you have an intro for that?
Stats?
There we go. Let's go.
That's me. Ho. What's that number? Oh, he's got that one on there too. Okay, so we're going to do a little summary here. In October of 2024, Ottawa's real estate market saw rising consumer confidence with 1,179 homes sold, a boost from September's 1,047. Year-to-date sales hit 11,662, up 9.4% from 2023, largely driven by recent interest rate cuts. However, many buyers remain on standby for further reductions, as informed to the masses from Torep, this show that you're listening to right now. Challenges persist with housing supply as Ontario's revised housing projections fall short of 2024 goals. OREP President Curtis Fillier emphasizes innovative policies are essential to address Ottawa's tight inventory, which impacts affordability. Solutions proposed include offsite construction tech and tax relief for affordable housing. Interesting. Prices show modest growth. Single-family homes are up 0.7% to 724,500. While townhouses rose 1.6%. October's average sales price increased by 1.2% year over year to $668,690. Inventory grew slightly, with active listings up 8.9% from last year, yet market remains tight. So that's a good way to close that into the images we have here. So we have the sales activity October year to date. It's really interesting because we're up from last year, but we're down from 2022, and we're closer to 2015 in terms of the actual sales activity. We were way up in 2021, 2020, 2019, and it kind of pyramided. Now it's just a little bit over last year, and that's sales activity October year to date. After that, new listings, we are way up. We are we're about 1,000 more than we were in 2017. So that's the highest amount of listings in a long time. I mean, 2021, 2022, we were in the 20,000 range again. Now we're getting closer to 22,000 for 2024. I think November, it could go up. I'm just not sure what we're going to see because a lot of people at this point are taking a break and waiting till spring, other than those who really want to sell or need to sell, as we also talk about frequently on the show. And then months of inventory. This is my favorite one in recent months, as you know. We are very high and over what we were back in 2018. And if you look at this chart, I mean, it's crazy. Look at 2015, five and a half months, almost 6 months of inventory in 2015. I remember that. 5 months, 2016, and then it just dropped right down, obviously, for the heyday of COVID And as you know, some of our viewers will say, the pump in the market, the madness was going on. But yeah, we're almost at 3 months worth of inventory. So again, sellers, be cautious, price well. Buyers, opportunities await if you're ready to buy.
Yeah, and what are you seeing firsthand, Greg? Stories from the field. What are you seeing in the market currently?
You know, things are moving, challenging. I've been involved in some very fair and realistic negotiations where it was just like mutually beneficial to everyone. There was no hard negotiations, I should say. I mean, other than just, getting to the bottom line. But I do know some sellers are very stuck on their price and getting offers 75,000 to 100,000 under, getting 3 or 4 of those, and then still thinking that they're going to get their full price eventually. So that is kind of surprising to me that people are reaching that far, thinking that they're still going to get that number after 3 or 4 offers. But I mean, the market's moving. It's moving. My business personally has slowed down in terms of buyers. We have about, I think, 8 buyers that we've been working with for the last few months, and none of them some have transacted, but there's a group that are just completely taking their time. We presented this is actually interesting for the public. I should have wrote this down, but I'm glad I'm thinking about it. Sometimes I don't write everything down, kind of like why I'm leaving here. Actually, it was written down, but the wrong day. Written down, but the wrong day, Greg. God, I'm getting old.
So it's kind of irrelevant whether you write it down or not, is what you're saying.
Yeah. So exactly. So we presented Venkat, our new build specialist, presented to me. And what he does is when he finds a good deal from new builds, he'll present it to me and say, like, do we have anybody? So he presented this opportunity. K-Van had this stacked towns for sale starting at $355, I think it was, for lower level stacked towns, which is insane. Condo fee is about $200, going up depending on end unit, upper level unit, etc. Presented it to me. I called 2 people that were actively shopping for or waiting for something like that. They've been waiting for it. I've been dealing with one person for, quite a while, waiting for a good opportunity. Someone else we met recently, waiting for a good opportunity. And we presented it. Everyone was kind of one guy was on board. The other one was like, well, we'll wait. I'll review it and I'll get back to you. 4 days, sold out. All of them sold. So, and that was 44 units. 44 units in Orleans sold. So now what happens, so that everyone listening knows this opportunity, I don't know who all the buyers were, obviously, but it wasn't like a rush to the sales office. It was very kind of like book a time to go in. The deals got done. The next release is going to be, based on that, my guess is those units are going to be at least $20,000 more. At least. Because of that type of activity that they had. Mm-hmm. And that's well within their right. I mean, to think that they sold 44 properties from Friday to Sunday.
In this market.
So that was a deal. That was a deal. And just so everyone knows, our guys didn't pull the trigger on it. They didn't go for it, but they're sold out now. So, and I told them, I said, well, you guys, when the next release is, it's going to be at least $20,000 more. So that was the opportunity you're waiting for and you missed it. But people need to be really, if you are looking to get in, and like, I regret that I didn't have any opportunity, or I wasn't ready to make a move on something like that, because that was, to me, that was the lowest price that we're going to see on new build stacked townhomes for a while in the city. I don't think it's going to go much lower than that. That to say, I do think prices are still going to stay kind of where they are. I don't know. They might go down a bit over the winter, but it's still moving. It's still moving. I'm excited.
So what you're saying is Venkat knows how to sniff out a deal.
What I'm saying is Venkat is the man. This guy, if anyone's looking for new builds, you talk to me.
Numbers guy.
You get to Venkat. He takes control. He will present you with the opportunities. You take control. And he will go like, Greg, I don't understand why these people aren't taking advantage of this. He's very good for that. Anyways, I'm out of here, guys. That's it for me. Brian, I'm sorry I can't speak to you, but I know that this is going to be a crazy conversation. So
special guest
I'll be looking forward to
Greg
listening
Campbell
to the show tomorrow. Should we just bring Brian? Anyways, I'm out. I gotta
go. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Guertin, Poirier, Avocat, Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at guertinpoirierlaw.ca. Let's get to the heart of your deal.
Greg on the outro, Brian on the intro.
See ya.
We're happy to have Brian Powell from Big Insurance in Westboro on. I've known Brian for probably now 8 years or so. We met at a networking group many years ago when he was managing an Allstate Barhaven location, and then he, just like us Paul on the banking side, realized that the broker channel was the way to go, and so he left Allstate, formed the group in Westboro, Big Insurance, and has been off to the races the last few years. So we know we kind of chatted about a month ago on the show, I don't know if Brian's in or not right now. I can't tell. So there we go.
There he is.
There we go. There he is. But we were chatting about insurance probably about a month ago now, and it's too bad Greg's not on right now, but what kind of a couple of things kind of started this was, number one, we want to obviously announce Brian's a longtime listener as well, and a new sponsor of the Ottawa Real Estate Podcast. So we really appreciate that, and obviously happy to have you on. So thanks for coming out, man.
Thanks for having me.
We're kind of, I know you texted me right after listening to the episode when Greg was talking about wet certificates and Poly B plumbing about a month ago, and how a lot of insurers are sticking away from that. So maybe we'll start even right there, kind of catching up with what we were talking about a month ago. Maybe you can kind of give us a little background as to why insurers are now looking for wet certificates, why Poly B plumbing has kind of resurfaced as an issue, and is this fact or fiction that people are staying away from, or insurers are staying away from these?
Yeah, for sure. Great question. I guess given our market right now, we're in something called a hard market. So insurance companies are strict on their underwriting guidelines due to all the, catastrophes nationwide right now, paying out more losses and pretty extreme losses. The Jasper fires earlier this year, along with the water claims in Montreal and Toronto, these events are billion-dollar claims. So insurance companies look to see what they can do to limit their exposures, and wet certificates and Poly B is one of those things that they can to limit their exposures. So on the wet certificates, a lot of companies do require a wet certification that's less than 2 years old in the homeowner's name, so they're not transferable. So that is a limit on some insurance companies, but here at Big, we do have access to a few companies that don't require wet certs, which is great. So they just need a picture of the wood stove plus the label on the side of the appliance to show that it's ULC certified. So with that, we could just need that it's less on the homeowner to have to go purchase a wet certificate. That being said, they're always good to also have, just to make sure that the appliances are running the right way. But in terms of insurance qualifications, we don't require wet cert with some particular companies.
Now, I guess for not having I would imagine it obviously, and by the sounds of it, really limits your options as far as insurers, and probably that few $100s that you could pay to get an inspector to provide that along with your home inspection is going to save you pretty significant amounts in premiums on an annual basis, and kind of open up the market for you.
Exactly, Dave. Like once we don't have a wet cert, we don't have as many options for our clients. But that being said, if a client doesn't want to get a wet cert, we still have options. Moving over to Poly B, what has probably happened is some insurance companies have experienced large losses with a Poly B home. So now they've just decided not to do Poly B. I know when I started at Allstate, it wasn't an issue. And then after a few years, it became an issue. And that's what I'm seeing here on the broker world too, that most companies do not want Poly B. So you just have to find specialty markets that are okay with that type of plumbing. We do have a standard company. So that's someone who is just like a TD, an Allstate, an Intact Economical that are okay with Poly B and will offer great coverage. And then if the property doesn't fall within what that company is looking for, we do have a lot of niche markets that are able to take on that risk.
So, Brian, Poly B is less expensive, right, for installation, but known to deteriorate. Is that kind of the fear? Like it's more exposed to
so they don't
water
use
pressure
it.
and stuff?
They don't use it anymore. It was, I believe, late 80s, early 90s that Poly B was quite popular. And if it's exposed to sunlight, it starts to deteriorate. So most of the time, plumbing's in the walls and sunlight's not going to go near it. So you should be okay. Funny enough, I had 3 homes in June that I insured that had Poly B in Orleans, and we were able to find them a company. It's actually a new company in Ontario. It's called Max Insurance, and they're okay with that risk, and they have awesome coverage.
Now, for those other insurers like you listed out that might not be okay with Poly B, do they have a period of time that, let's say, somebody's purchasing a home, they don't realize it's going to be an issue because people typically wait, and I'm sure you get it all the time, a week before closing, 2 weeks before closing, and you can only bind policies within 30 days anyways, but it's kind of last minute to get insurance, and then they realize, oh, it's got Poly B, we are limited on options. Is there anything where there's a grace period saying, like, we will insure you, you have 120 days, 180 days to update the plumbing to PEX or something like that, and we'll still insure you. You just have to provide proof of like an invoice that it's been done, kind of thing?
Yeah, that's a great question, Dave. Often, if you're staying with the same company, your current insurance company will provide like a 30 or 60-day follow-up to get that fixed. But if you're switching companies and going to a new company, they're less likely, or they don't want to be as accommodating as your current insurance company. So if you do come upon the situation like that, it's typically better just to stay with your own insurance company and not be jumping around. And that's another benefit of not jumping around from insurance company each year, to build a bit of loyalty within an insurance company. And then they're usually more willing to give you a 30 or 60-day on a new property.
Okay. So for a first-time home buyer, that wouldn't really help them.
They'd not really help them.
They'd be up the creek, but on existing, you're saying, kind of almost kind of similar to a mortgage, like port that policy over to a new home and stay with that same insurer.
But that being said, on a first-time home buyer, if they're out on their own, not in mom and dad's house, and they have tenant insurance, then they've built up loyalty with that insurance company. And when they're switching products from a tenant policy to a homeowner's, then they're able to make exceptions on that basis. So it's really important. Not all landlords require tenant insurance, but it's still a good idea for an insured to get tenant insurance so they're properly protected while they're renting, but also to create that insurance history for when they do purchase a home, because it does help with rate and eligibility.
And for you mentioned like kind of loyalty with your existing insurer. And I know this last month I fired you a couple of policies of my own to, I've got my home in Ottawa already with Brian, but I kind of had a few other policies kind of buckshotted that he's been able to switch over and actually save me quite a lot of money. So kudos to you. But, with that said, a lot of, kind of that long-standing relationship with an insurer, but they also then increase premiums, or, it's not shopped, and there's sometimes better options out there of switching.
For sure.
What are the pros and cons with staying with your insurer? Like you said, building up loyalty, but then it also, premiums are there when, somebody else might be able to provide same coverage, but at a lesser premium. Like, what's the pros and cons there?
I always say shop every 3 to 5 years. That way you're showing your track record, showing companies a little bit of loyalty, but also keeping them honest in terms of premium, because rates do change and there's always built-in discounts for new business to certain insurance companies. So I always say shop every 3 to 5 years just to see where you're at in terms of the market. And it's not just price, it's also coverages. Coverages are always changing. So there might be better coverages out there as insurance companies are trying to be more competitive, not necessarily on premium, but their overall value offer. in terms of coverages.
Brian, I have a question for you with
Yeah.
regards to home renovations and upgrades.
For
So
sure.
new policies coming down the pipe for people adding secondary suites and being able to refinance underinsured mortgages and so on. So what types of home renovations or upgrades unexpectedly raise insurance premiums? And are there ways to offset those kind of costs?
Yeah, great question, Paul. Typically, you should let your broker know if you're doing any sort of renovation, like a small kitchen renovation, bathroom renovation, especially if you're doing anything with water. It's good to let us know. In terms of increasing premiums, if the basement's unfinished and now it's becoming finished, that will have an increase on premium. Or if you're adding square footage to your home, if you're opening up any walls or anything like that, you should always let your insurance company know. Because if the renovation's over 20% of your overall dwelling value, typically an insurance company will want to put on a major renovation endorsement, or they might not even cover you. So you may be doing a renovation, not have the proper coverage, claim happens, and then it's denied. So you're kind of just throwing money out the window there. So it's always good to have a conversation with your broker or your agent if you're planning on having a big renovation. In terms of trying to save money, if you're doing anything in the basement, putting a backflow valve in if you have an older home to stop sewer backups, that's always a good thing to do. Keeping your hot water tank updated. Insurance companies don't like hot water tanks older than 10 years typically. Keeping your roof updated, stuff like that.
Yeah, I've run into a few of those issues in my past homes with backups. I'll tell you some good stories off air. on that note of savings, like what are some from your experience, like what are some of the best kept secrets for getting significant discounts on home insurance, or what are things that people wouldn't think of to let you know that maybe they have in place?
Yeah, so backflow valve, any water mitigation alarms. If your house is centrally monitored, so it can't be like Ring or anything like doorbell cameras, like those don't offer many discounts. But if you're getting something through like TELUS, ADT, so forth, like those typically offer 5 to 10% discounts. That being said, it's what you save on your insurance is not going to offset the monthly cost. It's just an added bonus. But if you're going to get a security system, it's more for your peace of mind. But keeping things updated, like the hot water tank, the roof, those typically add savings. Something you guys might not want to hear, but if someone is mortgage free, that's typically a large savings on a home, anywhere between 10 and 15% discount if a client's mortgage free. So as soon as you pay that off, celebrate and then call your insurance company to try and get some extra savings. And then as always, like combining your home and auto is the biggest way to save on premiums.
I think it can go the other way too for people that have what people don't realize, getting like alternative lenders or private or second mortgages when, calling your insurer and adding those on to make sure, number one, that they have coverage. Those lenders are going to want proof of coverage, but those also, like a second mortgage, does increase your premiums because it adds added risk, right?
For sure.
Of a loss.
A good question, Dave, or a good point. It also increases premiums, but also decreases the amount of companies that may want to insure your property. Once there's over 2 mortgages, we're very limited on who will offer home insurance. And then even further, if it's private lending, not as many companies want that. Insurance companies want that.
I guess at that point, they're worried of kind of reliability of that individual, risk of fire purposefully set to pay out those mortgages.
In the eyes of insurance, if you're struggling to pay your bills or stuff like that, maybe you're less likely to upkeep your home, which increases risk. So that's something they're looking at. Not the true for everybody, but history shows it, unfortunately.
And are there some kind of piggyback it off of Paul's original question of like tricks or tips that people could do to lower their premiums, but not, roof is updated, hot water tank. I know one small one that people don't think about or maybe aren't suggested of kind of increasing your deductible on some items where we're not making a small claim, but are there other things that you can do other than changing your deductible?
Not really, to be honest.
Okay.
And increasing your deductible it's not a huge savings. Typically $1,000 is your best value. Because if you do increase it to $2,500 or $5,000, if you have to make a claim within the first 5 years, you're not going to recoup your money. The bigger thing to watch is more what you said there, making a second claim. Right now, given it's a hard market, insurance companies if you do have 2 or 3 claims in less than 5 years, they're not going to continue insurance with you. So you may have to shop you to a high risk company where it's more expensive and coverage isn't as great. So something to, again, if you're going to be making a claim and you're on the fence, call your broker, your agent, and have that discussion with them to make sure it's the best option for you.
So it sounds like your insurers work similar to us. Like, there's kind of alternative. There's kind of the traditional insurers, then there's kind of the high risk insurers, and then there's the super high risk insurers for people that have those additional claims and so on.
Yeah, no, exactly. We have our type A or A lenders, or A insurance companies, B lenders, and then your private lending
and down the line.
Yeah, exactly.
And I know obviously that we're real estate focused, but you mentioned earlier about auto. I would imagine with how much auto theft there is in Ottawa and of certain types of brands, that those premiums have kind of skyrocketed across the board with how much auto has been going on here.
Yeah, no, theft has created a lot of increase on rate or in premium, along with just the cost of fixing vehicles is more expensive now with the sensors, backup cameras, or all the cameras on a vehicle now. So that's driving rate. I know when I started in the industry 12 years ago, average car rate in Ottawa was $100 to $1,000 per vehicle. Now our average premium is $1,600 to $1,700 per vehicle. So
wow,
jumped quite a bit. Even electric cars are getting a lot more expensive to insure. Like Tesla's 2 years ago, average premium was $2,000, $2,200 in Ottawa. Now it's getting closer to $3,500 to $4,000 for Teslas.
Wow.
So,
and is that because of the cost of repair?
Exactly. So as they become more popular, there's more data on them with the actuaries. So now they're increasing the rates on those types of vehicles.
You'd think those smart cars would keep out of accidents and,
Yeah.
Yeah, well, I think that was one of their selling points, is that they're less likely to get in an accident. But I guess the premiums speak for themselves.
Well, it's like, they might not cause the accident, but they still get involved in an accident.
Yeah.
It still need to be repaired. So that drives rate, unfortunately.
Yeah. No, that's awesome. So for anyone listening, where can they find you? When they're coming up for renewal, like you said, shopping for a rate every 3 to 5 years. And something that I, like we've talked about in this past couple of months, where I did exactly that on a couple of properties, and some of them you were able to shave off even 40% on the premium or more. Where could people find you? When should they reach out to you when they're coming up, or even if they're buying or selling?
So if you're coming up for renewal, 30 to 60 days before your renewal is a great time for us to shop it out. Make sure we're getting you properly protected for a great value. If it's a new purchase, we can do last minute. We're okay with that. But as we see, more conditions are coming into play right now with realtors, and you need us to know if you can get insurance on the property, especially for like rural properties or older properties. We can help with that. You can find us on the internet, www.thebig.ca/Westboro, or we can be reached at 613-239-5792, and anyone from our team here can help the listeners of Tow Rep out.
That's awesome. Appreciate that. Well, should we slide into some mood boost, Paul? Unless you got, you got some closing questions.
Yeah, let's do it. I got 3 today. And Brian, you're gonna have to fill in for Greg with your hums and ahs of how
I enjoy them every week.
You're the one. Okay, so I got 3 today. Number 1, what's the best way to watch a fly fishing tournament? Live stream. Live stream.
I do actually like that one.
I like that one.
Number 2, what do you call it when James Bond takes a bath? 007. And my personal favorite, number 3, why do peppers make such good archers? Because they have an arrow. Have an arrow. Yeah. Thank you to everyone listening. And thank you to our sponsors, including Big Insurance and Guertin Poirier Law, Centum Financial, Centum Canada, Centum Financial Services, David Warren, Greg Campbell, Paul Stevenson. We're here every week. Make sure to check us out on our socials. We have exclusive content. You can check us out on TikTok, Instagram, Facebook, wherever you socialize online. And new episodes are released every Wednesday, 10 a.m. Thank you for tuning in, and we'll see you next week. Have a good day.